Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and as always, with me, the top number one guru, creator, founder of Trading Trainer, 20 years in the game, AJ Brown. Good morning, AJ.
We are coming up on 20 years of the game. Good morning, Sip.
Today is January 27th. We're getting some movement in the markets, a lot of optimism, I feel like. Would you agree with that?
Yeah, but I don't want to get people's expectations worked up because we saw this. I'm going to pull up the S&P 500. We saw this in last summer, and I almost feel like we could be going in for another kind of false gain. We went up and then we went down. If you look over the month or the whole year of 2022, not too much about it, and I think that we better tamper our expectations or our excitement for 2023.
Yeah, I agree. We've been talking about that for the last couple of weeks, but it seems like the data is coming out all right, and the optimism is well, the Fed's gonna maybe slow down with the rate hikes. That's what I keep hearing in the news.
Yeah, I think that the Fed is going to slow down with the rate hikes. I mean, gosh, you take a look at some of the stuff, especially today. We got our personal income and outlay report. And this is really a big one that the Fed takes a look at closely. I'm pulling it up here on my computer. And so here is they want this to come down. It's been coming down quickly. And we know that these tactics that the Federal Reserve takes take some time to kick in. And so I feel like that boom, 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 it was like 25 basis points, 50 basis points, 75, 75, 75, 75, and then the most recent one was 50. That's a lot of rate hikes all at once. And that stuff is just starting to kick in. And so I think what we need to think about is not, is it working and will the Fed slow down? But did we go too far by shooting all these things and not waiting each time to see the effects? The Fed kind of backed itself into a corner because it was so late in responding. So I feel like this was their only choice. But the question is will this wind up sinking us? It's having, like, just in the last quarter, it's had drastic results on inflation. And so the question is what distance do they have to go?
Well, I think what I saw was 98% confidence level in a quarter basis point hike. I think you have the chart there. That's the exact number.
Mm-hmm. Mm-hmm. Yeah. Where is it right now? It's quarter point rate hike is what it's clocking in on. So this is what investor sentiment is. So they're still going to keep tweaking, but boy, they're pulling back from that 75%, 75 basis point rate hike.
When is that? When do we get that information? The next move?
It's next week, isn't it? It's next week. Yeah.
And so with the economic data continuing to come out, I feel like the market's starting to price it in. And on Wednesday or whatever the day that they release the numbers and they give their statement, it could be one of those weird moments where they raise by a quarter point, but like they say one thing in their speech and then everyone's like pessimistic again, right?
Yeah. Well, their words are quite powerful, but their tactics are also powerful, and their tactics are not agreeing with their very hawkish tone. Their tactics, their bond selling has slowed down. Their rate hikes have slowed down. I think they're in a position like the rest of us, just kind of in the wait and see mode to see how much this uh, um, friction that they have placed against the economy moving, what that's done, what that's doing.
And then what else do we have this week? GDP?
We had GDP numbers. I mean, GDP numbers were strong, especially compared to some of our competitors in the world, right? So, folks in Europe, folks in Asia, we were very strong, higher than consensus, and yet our inflation is coming down. So, if you're playing a comparison game with other economies in the world, the US is positioned well. If you're looking at just the absolute values, especially on individuals' balance sheets, it still hurts.
So GDP is looking good. This is leading to the optimism. I think there were some housing numbers which are not so bad, which I guess could be considered as good.
Mm-hmm.
New home sales.
Mm-hmm. They're slowing, but they're
Well,
they're not slowing as much as people thought.
and that I think that's expected when you raise rates as fast as you do. That's going to hit the housing sector more than other sectors.
Mm-hmm.
All right, so then that's what we're all sitting on the sidelines waiting on, is that Fed decision, and or we're still in earnings season. So earnings, are coming out. On last week's episode, we did talk about how to take advantage of earnings using options, and so one of the benefits of being in options trading, being an options investor, is that while the majority of people, investors, have to wait till Wednesday to see what the market's going to do, we as options traders have a lot of opportunity in the earnings season. And so we're going to take a moment and go through some of those. I know last week we talked about Microsoft. So we'll go through the setup and kind of what the play would have been there. If anybody's watching, listening for the first time, and you want to learn a little bit more about what AJ's doing, what we're doing here at Trading Trainer, we've got a daily workshop that's going to go over all the strategies. It's going to, I think you recently updated it, so there's some really good examples. Premium selling as the main vertical vehicle, but a lot of interesting stuff there. I'm going to go ahead and throw the link into the chat if you haven't checked it out. We're going to take a little bit of a break. We'll come back and talk a little bit of innovation, and then we'll go into AJ's pick of the week and our speed round. So stick around. We'll be back in a few minutes.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So once again, the link to that workshop is in the chat. We're going to go through the earnings in a moment, the earnings plays. I know you're setting that up. But something you and I have been talking about that's hitting a lot of the headlines is AI, right? Artificial intelligence. And let me ask you first, because you used to work for a pretty big tech company, HP, that seemed like it would be a company that would be on the forefront of helping develop things like this. Did you ever expect to use a product like or Chat GPT that basically answers and does anything that you want it to?
I mean, a lot of these forward thinkers have been talking about AI for a while now, and almost issuing warnings on that. I'm not sure anybody could really wrap their mind around it. I think now with this release of Chat GPT in the end of November, I mean, just in the last month and a half, I mean, I think people are starting to see how powerful this thing is. I mean, you could go to the Chat GPT website and you could literally ask it to write you a Excel spreadsheet macro that does XYZ. I went and tried to push the limits about how complicated this could get. And I had it, and it wrote a very complicated macro for me. I then decided to press a little bit extra further. I said, hey, because I've been doing a lot of these earnings plays, I said, would you find me stocks with low historical volatility around earnings that are optionable and that are coming up with a new earnings release this upcoming week? And it did respond to me and said, I don't have connection to financial data. But then it went on in the next paragraph and it said, but if this is what you want to do, go to this website. It told me to go. It gave me 4 different websites I could try. Yahoo Finance. I don't remember all of them, but it gave me the instructions on how to run the filters and the screeners to find what I was looking for. And I was like, phew.
Yeah, I just pulled it up on the screen if
Yes.
nobody's ever seen it. And so what I wrote in here was write a 600-word story about a trading trainer named AJ Brown with 20 years of experience. And like just the magic of how quickly it's going to be able to do this. I believe like this is what the mind-blowing stuff is. Like if you
Yeah.
know what to ask and what you're looking for, it kind of gets the ball rolling. Now it's going a little slow here, but once it starts chugging along, every time I keep logging in, it's like at max capacity. So I
Yeah.
mean, there's demand for this product.
Yeah. The scoop is all of those forward thinkers had pegged the date when AI would come at parity with us, meaning human intellect. And that was somewhere between 2035 and 2040. I mean, just looking at ChatGPT, I mean, man, this is going to be a game changer, as the forward thinkers have been saying for the last years. So
it's not just this Chat GPT. It's all sorts of services and tools, anything where information can be oh, hold on, it's starting to write it. There we go. Check it out.
can you believe it?
AJ Brown had been a trading trainer for over 20 years, and in that time had seen it all. From the dot-com boom and bust to the 2008 financial crisis, he had helped countless traders navigate the turbulent waters of the markets.
Wow. That's quite accurate, actually.
I think what it was doing was searching for some of the stuff that you have on your website and stuff, but like this is game changing. And I know specific to ChatGPT is a big investment from Microsoft, and that could be a good segue into our earnings play and our earnings discussion.
Definitely.
From last week, where we talked about a calendar spread that you use, which is a strategy that's a little bit outside of your core methodology, but it's good to utilize in earnings. And so first, let's just go through the Microsoft example. But Microsoft is a big investor in ChatGPT, and so that's a good move on their end if they're going to start utilizing this type of technology for their own products and services. I'm excited.
And just as a little plug, in our program, our premium selling program, once a month we do a lecture. Every week we do an actual workshop, a hands-on trading workshop. But once a week we do a lecture, and or once a month we do a lecture. And it was this past Tuesday, and the lecture was on a deep dive on how options function, what influences the options price, and how to kind of pick the right option and option strategy to fit the situation. And then we went on to really do a deep dive into what earnings plays are, but on a higher level, it definitely is in our bailiwick, because options allow us to look at any pattern, find what is going to be the consistent mover, and then profit on it. And so usually we do that based on time passing by, because time is a very consistent mover. But around earnings, we can do that on the consistent patterns behind earnings. And so a lot of people play earnings, as we talked about last week, trying to guess the direction. Will it go up? Will it go down? And if you think about it, that's such a complex thing to guess, because not only is it based on how well the company is doing, and you don't really know that until you receive the earnings report, but it's also based on how investors will interpret that information. So you're trying to hit this moving target that's connected to a moving target that's connected to a third moving target. And so that's basically playing like roulette. But what you can look at is, ahead of earnings, there's always going to be a certain amount of fear or uncertainty or confusion. People don't know what's going to happen. And options actually go up in price in that situation. And then right after earnings, once what was unknown becomes known, calm comes back into the market, and the earnings the options come back down in price. And so by selecting the correct options and strategies and expiration dates and strike prices, we can totally take advantage of that very consistent and predictable pattern, which is, before the surprise information is released, people get nervous. And after the surprise information is released and it's no longer surprise, they get calm again. So we talked about Microsoft. Well, I actually traded Microsoft. So let me go ahead and show you guys my trade, and it'll be pretty straightforward. I think you can see this right here. I just put it into text here. So Microsoft, they released their earnings on January 23rd after the market closed. So what I did was I decided to trade. Let me bring up Microsoft on my chart in the background. There we go. And I'll bring back the trade. So I traded that calendar debit spread. I did a put calendar debit spread. Microsoft, the back month option expired on July 21st. The front month option expires on February 3rd. The strike price of the two options was $245. So on the day of earnings, before the earnings was released, I went ahead and bought this thing for $9.70. And then a couple days later, right in the morning, I sold it for $11. So that's $1.30 per share, $1.27 after you factor in how much I paid on commissions. And so that wound up being, after commissions, about a 13.1% ROI for holding this position for literally less than 48 hours. So that was right here. You can see that Microsoft really didn't move much in price based on their earnings. In fact, that's something I look for. Just like in the time when we're selling premium, I look for stocks that are boring. Microsoft is typically a very boring stock. Even when they invest in ChatGPT, investors are like, well, this is a very, they're not like a Netflix or a Tesla. Microsoft's been around now for, almost 40 years. And so, they're considered boring. Another one, I did these all week, Sip. Do you want me to go through some other ones?
Yeah, let's do it. This is the exciting part of earnings season while we wait for the Fed decision.
Yeah, absolutely. I mean, General Electric, another boring stock. Premium on General Electric, if we can afford it. When it was, General Electric just consolidated its price, but for a while there, before they did their reverse split, they were down at like $8, $9, $10, and we were doing premium trades on them all the time. But let me go ahead and share with you guys just this earnings trade that we did last week. So General Electric, their earnings were also on January 23rd, but it was before market open versus after market close. So we jumped in there with the General Electric, again, going for the June 16th expiration. They didn't have a July. So we went with the June 16th. We tried to go about 6 months or so out, and we stuck with the February 3rd front month. We used the 80 strike price. This time we did it with calls. And the scoop is on January 23rd. I'm sorry, not January 23rd. I think that's a typo there. I meant to say January 22nd. I sold it the next day on January 23rd. Bought this thing for $4.30, sold it the next day for $5. And so after commissions, that was a 67-cent per share profit. And so that came out after commissions to a 15.5% ROI. Again, not much happened with the price sip. It was just that buildup of fear, and these calendar spreads are totally optimized to take advantage of fear before, calm later.
Can I ask
Go.
the question? Does this strategy work better for the boring names, right?
Yeah.
Like, can you have the same approach for something that moves a little bit more, or does that make it riskier?
Doesn't make it riskier, it just doesn't make it as optimized. So with a boring one, meaning that many investors might just blow off the earnings, this strategy works best if the options stay kind of at the money or around at the money. And if you get too far out or in the money, too far away from that strike price, it loses its effectiveness. So you kind of want ones that are going to stay around the strike price. Now, you could, if you kind of have an inkling, but now we're getting back into guessing direction. But if you have an inkling of direction, you could pick this strike price to be, where you think price will go. And that would actually kind of turbocharge this strategy. But again, you're bringing in that guessing of what might happen. So I just go for the boring stocks. I like the sure bet. And so the boring stocks that aren't going to move that much, they've been around, they've had earnings that aren't going to move that much. And even if they move a little, this strategy is quite innocuous to little movements. And I just pick an at the money strike price 6 months out for the back month, within about 5 to 10 days for the front month. I create this calendar debit spread. And so, for instance, I did one more on American Airlines. That was this week. And got rid of it this morning. Back on January 25th, I paid $1.30. Earnings went by. You can see the investors weren't too concerned with what happened with earnings. There was a little bit of a blip. And this morning I sold it for $1.55. So I walked away with 16.7% ROI after commissions. Now, you also notice something interesting. When the calendar spread is lower in price, your commissions take a bigger hit out of your reward, right? Whereas if it's higher priced, like this Microsoft one, the commissions were a smaller cut of what I made. That's just the name of the game. American Airlines, I was able to do these transactions at about $1.30 per share. The commissions are basically a flat fee, a per share price. So if it's $1.30, I pay more in commissions than if I pay $9.70, right?
Yeah, awesome. We got some good questions coming in that I think are very relevant. So this is Andrew. Maybe you can clarify this. Why did you sell Microsoft after the earnings but sold GE before it? Is that the case?
No. So after market close was when earnings was. And so I bought it the day of. So, I bought it on the 24th. Then they released earnings. And then I sold it on the 26th, which was after the earnings. GE, you can see here, GE released their earnings before the market opened on the 23rd. I bought it on the 22nd. And I sold it on 23rd. So you want to bracket when the earnings is released, because that's when the fear turns into confidence, right? So you want to do it you want to buy before the earnings. So in this case, earnings was the morning before the market opened on the 23rd. So I bought on the 22nd. In the case of Microsoft was after the market closed on the 24th. So I purchased on the 24th and then I sold on the 26th, right? So I hope that clarifies.
All right, cool. We still got some more coming in. This is great. This must be a popular topic. Do you care what the price of the stock is? Would you prefer higher price stocks for the calendar spread specifically?
Well, that's going to depend on the size of your portfolio. So we haven't even, this is something that can get into a long like teaching lesson, which is what we do in our program. But you do have to factor in risk. You have to factor in position sizing, and that has a lot to do with how big a portfolio you have. So you may be limited because if you are limited to the amount of risk you can take on, you can't have something that has the potential to lose so much. So that's going to be the decider on, what dollar factor or what price you can pay for these.
All right, and one more. Why not? So everyone's liking this calendar spread. Um, Balwant wants to know about UPS. It seems like that's something that's coming up, and maybe there's a similar play.
Yeah. So let's take a look. We're going to go back in time here. And so take a look at the different earnings. And so every time UPS reports earnings, look at what happens. Huge gap down in price. Huge gap down in price, or gap up in price. Here's another earnings. Every time they report earnings, the investors are quite. This one was a calm one. This one still had a big drop. This one a little bit calmer. I'd be careful with UPS because, again, like I said, this strategy is optimized for, it can absorb some price action. But when you're talking about some of the price action that we saw, especially in 2021 and the beginning of 2022, this is not, UPS has a tendency to be somewhat volatile at earnings. And so maybe this strategy isn't the best for something like that. Go for a more boring stock. And I do realize that UPS has become more boring recently, but it has that potential. Those investors on UPS are fickle. The stock that I wanted to feature, Sip, is General Motors. So General Motors is a little bit more on the boring side. You go back and you look at earnings, there might be a tiny, but on the overall price of General Motors, the movements that happen during earnings consistently, very, very small, right? Or even inconsequential. So I'm going to be looking at General Motors myself since they've got a earnings release coming up. It is going to be before the market opens on January 31st. So what does that mean, folks? Before the market opens, that means you want to get your trade in before January 31st, because on January 31st, before the market opens, they're going to be releasing their earnings. So if you're going on January 31st, it's too late. So January 30th would probably be a good time to be thinking about this. And by the way, there's no recommendations on my part as far as, I haven't, where this is just a quick show, Sip. So, these folks aren't getting exposed to how you position size and things like that. So I'm not recommending anything. If you want to, I definitely, if you've never done something like this before, simulate or trade it, paper trade it. But I'll be looking at General Motors for my next earnings play, I think.
Awesome. And on that, if you do want to learn more specific to the strategies, to sizing, to analyzing your portfolio, to executing these recommended trades or investment ideas.
Yeah, no recommendations here.
No recommendations, ideas. We're just ideating on possibilities.
I love it.
And providing potential examples of entries and exits, and always a stop loss, always utilizing a stop loss, knowing your risk. But AJ does have an amazing one-on-one coaching program where him and his team will take a look at your personality, your investment personality, your investment portfolio, and make recommendations on how to approach growing it specifically using options and this proven method of premium selling, which I've become a big fan of since we started the show. So I'm going to go ahead and throw that link into the chat.
Can I comment on that?
Here, let's go.
Well, the coaching program, one of our aspects, one of the things we give our mentoring students is the ability to have what we call a coaching on demand session. That means you don't have to wait for your formal session to come around. You can just, get into it with our concierge and say, I need a session right now. And over the past week, we've had so many of our clients say, hey, give me the skinny on these earnings plays, on these calendar spreads, so I could use them. So, that's a perfect way, because not only are you not waiting for like these classes where it's me teaching the masses, you can get right in there and work with one-on-one and have somebody explain it till you fully understand all the details.
And once again, the link to that is in the chat. Just head on over there, scroll down, schedule a quick appointment, and you'll have all of your questions answered. No hassle, no obligation, really just very informative. And it's just easier to have that conversation with somebody than, reading it or watching a video or something. So
we are getting very picky, Sip. So it's good to have this informational, back and forth with us. Again, there's no obligation. In fact, it turns out, since we are really looking for, because another part of that program is that we wind up trading with you for 6 months. Our goal during that mentoring program is not only to teach you stuff, but also to then make you use it, and together, really make this not just stuff that we've taught you, but stuff that you've used. And our goal is to make sure that during that 6 months of trading with you, that you make back the money you spent on us. The idea is that, when it comes down to the end, the bottom line, you don't have to owe us, it winds up being free education because you make the money back during the program. So with that said, we're looking for a particular type of investor. And so in those informational sessions that you have to initiate with us, if you want to be part of our program, we'll be looking at you as well. And I just want to be completely clear, because it turns out we have limited spots. We've already gotten rid of most of our February spots. We only have a couple left. So we're really being picky about who we work with as well. So find out if it's a match. It's based on you initiating that interview with us.
Yeah, and I like the 6-month time frame, because people who might be new to investing, or a new investing tool or method, they want to see results right away, right? Everyone's always anxious to see those results and to know that it's working. And so, since we started the show, I've personally learned that the time can be your benefactor, right? And just being patient and just, implementing these more boring strategies, right? Everybody wants, but they're not boring when you look at the numbers, because we just went through an example of a 15% return after commission, 13% return after commission, 16% return
1 to 2 days.
In 1 to 2 days, right? So just knowing how to approach that. So that's what the one-on-one program is there for. The link is in the chat. All right, let's get down to the dirty of the show, and that's our speed round. So if anybody watching, listening has some tickers that they want AJ to review, feel free to throw it into the chat, and we'll see if we can get to it. Otherwise, our first name in our speed round is from David in Milpitas, California. Not sure where that is. Milpitas.
Silicon Valley.
Okay. C3.ai, ticker symbol AI, staying in line with our AI conversation.
Yeah. So this is an AI developer. And so we can take a look at this chart. I like the price point. Listen, this is going up in price. I'm not sure this is one I'd sell premium on. In fact, based on what we've been talking about, This company has some strong fundamentals and it has some strong potential. And, I've been really harping, especially right now with what's happening in the present, on companies being profitable. And you can see here that, C3 AI is not. But if you're a believer in AI, and I'm more and more just since the end of November when ChatGPT became in everybody's rifle shot in their targets, you might want to pick this up for a long-term hold. And so how do we do that as premium sellers? Instead of just going out and saying, I'm going to buy this thing and then hold on to it, we try to get the deal. And how do we get the deal? We do it by selling cash secured puts. I think this is a perfect candidate for selling cash secured puts, maybe putting it out there at $15 or $16. And so what does that mean? It means that I'm going to go probably, let me change my expiration dates. I've been in the earnings mode, but now that I'm kind of in the premium buying and premium selling mode, I'll go out to the third Friday of February, February 17th, and I'll pick the price I'm willing to pay for the stock. So say, for instance, I'm willing to pay $16 a share. So I'll go ahead and sell this cash secured put. That means I have to have $16 per share. These options are sold in lots of 100. So I need to have about $1,600 ready to go to buy this. But when I sell this, they're going to immediately give me a credit of 75 cents per share or $75. They're just going to give you that credit for having sold that premium. And then whether or not somebody wants to sell you that stock at that price at $16, that'll materialize between now and February 17th. If they don't, you get to keep that money. You get to keep the $75 and you can try again in March. I don't think there's any hurry to add this to your portfolio, but you could do this month after month. And every time somebody decides to say, no, I don't want to sell it to you at the price you're interested to, you walk away with, a nice premium. So you could do that until you get the price you want to pay. And there's no other better way to buy stock, right? You buy the stock, you decide the price you're willing to pay, and if nobody wants to do it, you get a prize. It's fantastic.
Yeah, I imagine David might, have some additional information being out there in Silicon Valley, working with all these amazing new AI tools. So thank you,
Yeah.
David. Moving on to our next name, we're going to head down south. This is Gerald in Fort Worth, Texas, interested in Riot Platforms, ticker symbol RIOT.
Now, this is another topic we talk about often. Riot Platforms, if I understand correctly, they invest in Bitcoin mining and not just Bitcoin mining, but crypto mining. They've got all the hardware, they've got the infrastructure and all of that good stuff. They're setting up these server farms, I think in the middle of Texas. So that might explain why Gerald's interested in this. So yeah, this might be a nice premium trade. You can see they're not making any money. This might be an interesting premium trade. Here's one where, we decide with our premium trade if there's any sort of underlying bias. So when we do our premium trade, we always have to set up a initial covering position. And that initial covering position can also be strategically selected if there's any sort of bias on the stock. So I would select something that would profit perhaps if this company goes a little bit down in price. So I would be either shorting some Riot stock right now, or I might be considering buying some put options. And when I say buy put options, I'm talking about deep in the money, far out in time put options. This would be my back month. Either one of those would be a nice initial covering position for selling put premium and rolling out protective calls. And I think that's probably what I would do here. Let me look at the option chain. Sometimes I get far along with how I would do this trade. So the premium trades, You can see there's quite a lot of liquidity. That's great. The protective option trade, we'll look at the June. We'll look at the June is a good one for protective options. Also, a lot of activity. They're trading every dollar. So, yeah, I stick by my recommendations. I think that this would be a fantastic candidate to perhaps do some premium trading on, and I would put a bias on it for some downward move.
Awesome. Thank you, Gerald. Moving back to the West Coast, this is Vicky in Palo Alto, California, with Upstart Holdings UPST. I feel like we chatted about this one not too long ago.
Yeah, and I believe that this is a fund, if I remember correctly, this is a fund that invests in a lot of AI plays. So they've got a public fund where these guys are then investing into AI plays. So sticking with our theme, I guess. Let me back up a little bit. I'm going to look at a little bit of a bigger chart to see. So they had some major investment, which, when cash was easy to come across. I think here's what this company is suffering from. This company is suffering from the tightness in the economy and the fact that the Fed is manipulating things and making durable goods, making boring companies, boring bonds more lucrative. And so a lot of money has gone from these kind of long plays, like funding a company that funds AI, which isn't going to profit for maybe another few years, to things that are profiting right now. So I can tell that at one point when cash was easy and investors were, putting it on all different sorts of high risk ticker symbols, this company got funded well. And now that, people are being stingy with their money and they're going for the sure thing, this company isn't getting so it's not being funded as much. So yeah, I almost feel like I'd want to wait on Upstart Holdings a little bit for more of a pattern to develop. So I do a lot of paper trading on Upstart to just see how it plays out. But I could see here how you might want to, for instance, set up at an initial position, again, shorting the symbol, perhaps even buying a back month deep in the money put option. Let's see if they have back month deep in the money put options. Oh, yeah. Yeah, there's a lot of option play on these candidates. I think you could find a back month put option, which would be a great substitute for having to short the stock. It doesn't require you to have a margin account. You could do it in a cash account. And then as this thing dips and finds its bottom, maybe down here at $12 again, that would be a perfect opportunity to set up the premium trade on this. So yeah, I think there's some potential there, but personally, and again, no recommendations here, but we're ideating, as Sip said. I would watch this one a little bit longer and perhaps paper trade it, get some experience with it before actually putting real dollars down.
Yeah, we had some chatter in the chat on paper trading, so always recommend it. We've got one live one that I think is worth looking into. EQT. Are you familiar with that company, EQT?
EQT Corporation. No, but I do see some consolidation on EQT. Let me go ahead and back it up a little bit. So when I say consolidation, what I'm talking about, and this is a measurement I teach my folks to do, I teach them to kind of identify the current channel. So for instance, it looks like this thing is consolidating or converging onto the $34 mark, and it's currently trading between about 34 and 36. So that's like a $4 spread, maybe even a little bit less. It looks like it's actually more like 35 $35 down to maybe 32. It might only be as small as a 50 cent to $1 spread on this current consolidation. And if you look at that as a ratio of the average price around $34, this is basically telling you that the investors behind EQT, and I'd have to do a little bit more research to substantiate what I'm about to say, but my knee-jerk reaction is investors are kind of in a wait and hold period, and pressure is building, and they're wondering what they should do with their shares. Should they buy more or should they buy less? And the outcome typically is that surprisingly, some little small tinder is going to go into that powder cake, that powder keg, and it's going to either blow up, down, or up, but it probably won't stay around the $34 mark for long. This makes it very difficult to sell premium against, and you know, my knee-jerk reaction is you'd want to trade some sort of breakout strategy on this versus selling premium.
All right, that was Mike. Hope that helps Mike. All right, so that is kind of the end of our show. Thank you everybody for throwing those out there, for giving us some tickers to look at throughout the week.
Yeah.
If you're interested in learning more about the program, the Trading Trainer community, we've got 2 links in the chat. We've got the daily workshop, and we've got the one-on-one coaching. It's Friday. The market we're teetering up a little bit here. What are we looking to get into through the end of the week, early next week? Are we just waiting for that Fed decision to come out and then deciding on, at what point does earnings end? Technically, I guess is a better question.
I mean, to be honest, earnings goes, it's gotten to the point where companies are reporting earnings nonstop, but the big season is going to end probably in a week or two for the majority. We're right in the middle of it. And that just brings up something, I always teach folks to be aware of what's happening and then trade and invest accordingly, and not to be caught trading and investing one way when things change and thinking that way is going to work, because that's always a recipe for disaster. So specifically during earnings season, premium trades, the ones that we hold for time, sometimes don't work very well during earnings season. Now, if you've gotten to the point where you've set up your trade zone, well, then you're inoculated against any sort of extreme movements. The given amount of risk and the given amount of reward if you go outside of your trade zone. So if you set up your trade zone on your premium trades, earnings isn't a phase. But if you're just in your initial covering position, one thing you might consider is cashing out ahead of earnings, letting earnings come and go, the dust to settle, and then get back in with your initial covering position. So if you're just in there with your initial covering position, waiting for the best opportunity to set up your trade zone and create that protective trade, maybe for earnings, what I always recommend is, the safe bet is cash out, let the earnings come and pass, let investors freak out or not freak out as they may be. Cash is always safe. Then come right back in and you can take off where you left before. And then look for what actually does work during earnings season. We've been talking this whole show and the whole last show about consistent variables you can trade and the tools to trade those consistent patterns. So do that instead. In other words, be flexible. The number one thing that's ever happened that always comes to me is when I speak live, people come up after my speaking and they're like, I was doing this XYZ strategy and it was working for first month, second month, all the way up to month 9. I was doing really well. And then month 10, I did the same strategy and I lost everything I had made in the first 9 months plus half of my portfolio. And what that tells me is that you're not in tune with the pattern that strategy works with. You're just throwing strategies. It's like throwing spaghetti at the wall. Pay attention to the patterns that are developing and trade them accordingly. and stop trading when the pattern goes away.
And if you need somebody to help you in that process, in that journey,
We're here.
That's why AJ created the program over 20 years now. So you don't have to hear it from me. You don't have to hear it from AJ. There's hundreds, if not thousands, of members all around the world who are tuning in, collaborating and helping each other, make these decisions so you don't blow your account out, so that you can maintain a healthy stream of investment income. And so, we got a lot going on next week. We probably will have a more exciting show, right? We'll have some more earnings. We'll have all that Fed decision. The dust will clear by then. So I guess we'll kind of just wait till then. AJ, I appreciate your time. I appreciate everybody tuning in. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. We appreciate it. And with that, we'll catch everybody next week.
See ya, everybody. Thank you.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.